If you're trading the news, then there's a good chance you are doing it wrong. Just like most people, you've probably heard this advice before. Only trade during major news releases. That's where the real moves happen. Everything else is dead time. Sounds convincing. After all, that's when the market moves the most. So I decided to test it. I took an economic calendar and spent an entire month trading strictly around major news events. 100 trades. In this video, you'll see the real results. No theories, no opinions. You'll learn how to tell the difference between a news event that actually works with a strategy and one that can destroy your account. And I'll show you a setup that genuinely performs during news releases. So let's get into it. This started with a comment under one of my videos. Just a regular viewer. No name, nothing special. But the comment stuck with me. It said, "Why sit in front of the platform all day when 80% of the movement happens during 15 minutes around NFP?" The louder the advice sounds, the more carefully it should be tested. So I opened the economic calendar, picked a month, and traded only during major news windows. 100 trades, let's see what happened. I didn't want to test this with 1 or 2 trades. I wanted statistics. So I filtered the calendar and kept only high-impact events, the ones marked with the 3 stars. NFP, Federal Reserve meetings, central bank rate decisions, inflation reports, GDP releases. Over the month, that gave me roughly 25 to 30 major events. The rule was simple. For every event, I traded within a 30-minute window before and after the release using my normal strategy. At the same time, I continued trading during regular market hours using the exact same strategy. That way, I had something to compare against. I documented everything carefully. Every trade was posted in my Telegram channel the moment I entered it. Screenshots, timestamps, no posting results later from memory. Everything happened live in front of subscribers. And here is what the numbers showed. My win rate during news events was lower than usual. Not by 1 or 2%, noticeably lower. At the end of the month, the news trading column was basically flat. Meanwhile, my normal trading produced the usual profit. At that point, I was already thinking about making a video called "The News Trading Myths Doesn't Work." But before jumping to conclusions, I decided to review every trade individually. And that's where things got interesting. Once I sorted all 100 trades by event type, the picture changed completely. On most news releases, above 95% of them, the market reacted chaotically. Sharp spikes in both directions, no clear trend, no structure. Strategy simply gets lost in that kind of noise. That's what dragged the result down. But a handful of events looked completely different. Clean directional movement, strong trends. After the release, price would continue moving for 5 or even 10 minutes. And the strategy performed almost perfectly. So I wrote down exactly which events created those clean moves. NFP, the US non-farm payroll report, Federal Reserve interest rate decisions, European Central Bank rate decisions, Bank of England rate decisions, and sometimes US inflation data when the market was especially focused on inflation. Everything else, PMI reports, retail sales, weekly unemployment claims. Most of those generated nothing but noise. That's when I realized where the advice goes wrong. Trade the news is only half correct. It identifies the source of movement. Major economic releases absolutely move markets, but it fails to filter. News is too broad. 5 specific events is much more accurate. The other 20+ events on the calendar only look important. Most of them do not produce a tradable direction. After that month, I kept only those 5 events types on my calendar. Now I trade exclusively during those windows. And here is the strategy I use when those events arrive. Let me show you. So first, I'll set up the platform, chart top candlesticks, time frame 15 seconds. I'm using 2 indicators, Fractal and Williams. Let's start with Fractal. Period 3. A shorter period makes it more sensitive, which helps on a fast time frame. The fractal marks turning points with arrows. Red above the candle indicates a local high. Green below the candle indicates a local low. Next is Williams. Period 15, levels -20 and -80. These define overbought and oversold zones. Below -80 means oversold. Above -20 means overbought. The logic is quite simple. Fractal identifies the reversal point, Williams confirms that price is leaving an extreme zone in the same direction. This combination works especially well during pullbacks after a strong news-driven impulse. So let's begin. I'm opening my first trade up $200, expiration time 1 minute. The market made a strong upward impulse and then pulled back. Fractal printed a green arrow below the candle. That's a local low and a potential reversal point. Williams dropped below -80 and is now turning upward. Everything aligns perfectly. So let's wait for the expiration. The trade closes. We get $384 plus. Exactly how the setup is supposed to work. So far, so good. I've already compiled the list of those 5 market-moving events, plus a full calendar of the upcoming month with exact dates and times. And everything, by the way, is available in my Telegram channel for free. The link is below this video. Make sure you check it out. So let's continue. This setup is the mirror image of the previous one. The market moved higher and then reversed lower, opening a downside trade, $384. Look at Fractal. A red arrow appears above the candle. That's a local high. Williams was above -20 and has now turned downward. Perfect confirmation. And here's the important part. This strategy doesn't predict direction, it reads reversals. After a strong move in either direction, a pullback usually follows. That's exactly what this setup is designed to capture. So let's wait for the expiration. Plus $737. Excellent. So the advice only trade the news is only half true. Going back to that commenter, here the first half, trade the news, and he is probably trading every news releases he sees, just like most people. But listen to the second half, trade only the 5 that matter, nothing else. After that month, I completely changed my routine. Every Sunday evening, I open the economic calendar for the week ahead. If one of those 5 events is scheduled, I highlight it. Sometimes there is 1, sometimes 2, sometimes not at all. Everything else gets ignored. I used to scroll through the calendar and see dozens of red headlines. Every one of them looked like an opportunity. Now I only see 5. And I think that's the real difference between professionals and everyone else. Not seeing more opportunities, seeing only the real ones. I run experiments like this all the time and post every trade in real time on Telegram. Make sure you check it out. The link is below this video.